shareholders, guests, our own team of key people, and shareholders, of course, welcome to this meeting. Now, my name is Ross Keenan, and I am Chairman of AWF Madison. I'm delighted to chair this meeting of our shareholders. And here we are again at the Northern Club. We think this venue fits well for our size and needs. Interesting enough, we've got 120 odd more shareholders on the register this year compared to last year. As I stood here last year, we had a little over 500, which is the magic number, of course, some might remember. This year we have 628 to 634, depending on the day of the week. But that's relevant because over 80% of the shares are held by 20% of the shareholders, led by my colleague and founder of AWF, of course, Simon Hull. But it does mean we get these massive shifts in price around on the back of very small transactions, but that's such is our life. And of course, as you're all well aware, over the last year the share price has taken a real hammering, and you've probably got a view on that too. I think throughout the year we did attempt to keep shareholders informed as to how we were tracking, but still a reduction of the share price of that nature was a severe punishment for us. So to matters of the day, are there any apologies shareholders would wish to have recorded? Mr. Jim Syme, he is one of that top 20 I talked about. Right, Dave, we just note Mr. Syme. And just to advise, we've had no specific questions to this meeting. Quite often in recent times we've got some interesting ones. But I'm pleased to advise we have either in attendance personally or by proxy over 95% of the voting shareholders. So we indeed have a quorum. And at the close of voting as of Monday, 74% of all shares had been voted by shareholders, 24.7 million of 33. So increasing interest in what we're doing and how we're tracking, which is good. So as appropriate, I'd like to introduce my fellow directors up here. I'm starting on my right, Simon Hull, of course, founder of AWF, the architect all those years ago of taking AWF to market. And we call him the founder of the group. He is, but only part of the group now because we've sort of moved on from AWF. We have a couple of the other founders around too, but that's Simon Hull. I'm looking over next to him is Ted Van Arkel. Ted Van Arkel is a long-serving director, of course, as you know, retiring today, and we'll talk a little bit about that later. And to his right, Winnis Armour. She is one of the vendors of Madison, who we acquired a few years ago. And Winnis joined our board after an appropriate gap, and I'm just delighted she's agreed to continue to do so. Across to my left, we have Nick Simcock. First time you've seen him as an independent director, but he represented just that change I was referring to last year of moving to the next generation of directors. And of course, we have Julia Hoare next to Nick, and I am just delighted with the fact that Julia, in her busy life, has put herself available to be with us for another term. She's a great director, and we don't call on too much of a time. Well, I don't think we do. But when the real hard stuff comes up to be done, end of year, the financials, the regulations, boy, are we fortunate to have Julia there. So very keen to support her reappointment. Later you'll hear from Simon Bennett, who is on my left, and Simon will introduce his team as appropriate. Now, some of you will have noticed that in the chairman's letter in the annual report I made extensive comment about how the board works, and I must say Nick Simcock has slotted well into that mix of skills that we have on the board. We're also doing okay with the boys and girls thing that gets so much attention these days. But he does indeed bring that generation change and modern techniques in employment management and corporate experience that we were seeking. So we're looking to formally receive shareholder approval to appoint Nick as a director. And as I also commented in the annual report, we're signifying the retirement of founding director Ted Van Arkel, and I'll be asking Simon Hull to comment on Ted's significant commitment and contribution to the group over the years. And you might have noted I'm up for reappointment, and if approved, of course I believe continuity is important, But then, just as Ted did a couple of years ago, I will signal my intention to retire through this term, and we will again, as we did last year, look to appoint a new generation director, and within that the board will establish a chairman going forward, and so that'll take part in this next term, and I'll retire accordingly in that process. But at the moment we're in the middle of a journey, and I think it's important that we continue that. Now, we met here last time. I was asked by one shareholder how we were tracking. Difficult shareholder that bloke is anyway, but I did say we're on track. Now, not a satisfactory answer that shareholder told me, and I sort of understand that. But my goodness, wasn't I glad I had said we're on track when within a month we'd had that shocking weather around the North and South Island. We'd had some interesting and negative issues around our imported labour arrivals, skilled labour, so we got off track very quickly, and so it continued. So AWF had a poor and very frustrating year for all the team of AWF. Madison took a while to get going, and then later in the year we did really well on the back of very intense but very successful commitment to the labour part of the census contract, and that has continued. And of course, through all this, Absolute IT and the team we had brought with Absolute IT delivered handsomely to the company, and indeed they continue to do so. And Absolute has proved to be an absolutely, no pun intended, complementary fit to our business. No pun intended. In many ways, 1917 and 18 was a watershed year. It demonstrated very well the value of having a diverse business mix. But this year you'll have noticed the white-collar business has overtaken the blue-collar business in terms of its contribution, at bottom line terms anyway, to the business of AWF Madison. And indeed that is continuing. Now, I don't wish to delve into operational matters. I've been told off before that I am tempted to do so, and that causes my team problems. So with that, I would like to move to agenda item number 2. For those of you who have an agenda item in front of you. And that's to note the audited published accounts, and you'll have observed the published accounts for the year ended 31st of March. And might I suggest if you have any comments on those, you can bring those up in general business, or I'd prefer you did if you would. And as I said, we've had no written questions on them anyway. And of course they're capably done by Deloitte and audited formally, and we've got Andrew Dick here, so if I get into trouble I can flick security questions to him, can't I, Andrew? Can we move to agenda item 3, and that is where we note for the record the final dividend of 8.2 cents, fully imputed, and indeed note total dividends for the year of 16.2. So even though profit fell about 11%, we retained the dividend at 16.2 because of the strong cash flow. Our advisors recommended that, and that's what we did. Again, I'm happy to discuss dividends and dividend policy in general business if you like, and indeed the introduction of the dividend reinvestment plan, which, although covered off in the annual report, might require some clarification. We were quite late in getting to that, and that may meant that you didn't have a proper chance to really look at what it all meant. But I noticed in response from a shareholder last year, Bruce Parks actually, he's here today, that's good, thank you Bruce. You asked about debt levels, and I said we're in the process of having an independent review of capital structure and dividend policy, and so we did. As I said, it took us a lot longer than we thought, but we commissioned Grant Samuel to do a thorough look at us. We had completed the purchase of Absolute, we'd paid the earn-out, Absolute was performing. We needed to look at what the forward looked like. AWF was struggling on the back of what I described to you and others, but they did that. And their recommendation to us was maintain the dividend, but introduce a dividend reinvestment plan, and that we did. That all hinged, of course, on Simon Hull as our major shareholder, and when he agreed to participate up to 50% of his dividend flow, then it seemed to the board it was a very sensible way to accelerate our reduction of our debt, which we all know, which was basically your question, is too high. So we're well underway. What I can update you is that 61% of shares by number participated in the dividend reinvestment plan, and that's 11% of shareholders, so not a big percentage of shareholders, 66 out of 628. But I think from our point of view, it was a little lower than we'd hoped, but the reality of it, 70% of shares was the target. But I think in reality, we were pretty late getting that out to you, and so you may not have had the opportunity to consider the option. But we also think it reinforces the point that for our shareholders, the attraction to you of AWF is the dividend yield itself. So it was important that we maintained that, and that's so we did. And I should report that, in fact, as a consequence of that, we did, in fact, last week, Tony, wasn't it? We reduced debt by 3 million. So we're on track to do just that. So I don't want to talk about operational matters. I said I got into trouble about that. So I'd like now to pass to Simon Bennett, Chief Executive, for his presentation.
Thanks, Ross. I thought that might have been quite nice for Simon Hull to pick up there for a moment for us. But, morning, everybody. Thanks very much for joining us here today at our annual general meeting. We thought the numbers might be down, but in fact, I think we've got lots of the companies on the NZX aren't actually really even having meetings. I think even big ones like Z. So nice of you to attend. Well, it's certainly been a busy and challenging year for us. But as I speak to you today, I can assure you that we are a much, much stronger business than we were a year ago. And I think that you can put that strength down to the capability of the team and the wider business. And most of my team is here today, and maybe not a curtsy or just stand up briefly as I name you. We got a decent amount of diversity, good skills mix and tenure. So the newest member of the team, Christian Brown, he is leading Madison now, having come from a group sales role. He started in May. And last year you will have met Tracy, who runs Absolute IT, Fleur Board, one of our GMs in AWF. Her colleague Donna Lynch couldn't be with us today. And the supporting leads, I guess, Tony Staub last year was here, but as a contractor already, he did 12 months with us on a contingent sort of basis, and we're really happy that he is now permanent. We have Shireen Lowe over on the right, who I used to make reference to her being very young. She is now very pregnant and in her 16th year with the business. And just to her left, Chris Hernick here for the first time, who's IT manager, who I think has been around for about 13 years coming through Madison. I think that's all to mention. Oh, sorry, David. I forgot you last year. David Lazarus, our company secretary. It's a really good mix. You can see on the chart there in grey, really got half my team is support and half in operations, and I think it really gives us a good mix of operations, strategic and support functions to drive the business. So the year that was, financial year 18, it was an interesting one. The market conditions were really mixed last year. The first half of the year was quite buoyant. Almost too buoyant, we would say, as customers sought probably to rely less on contingent labour. And whilst we benefit from permanent placements, contingent is where we generate most of our earnings. The second half coincided with the election, and as you know, there was a delay in the formation of the government, and this caused some uncertainty and certainly impacted on recruitment decision-making leading up to Christmas. We've noticed, as of many others, a lack of confidence in the economy post-Christmas in most sectors. And perhaps the exception is IT, where we're seeing really, really strong demand for permanent recruitment, but also good demand for contingent as well. As a business, we adapt well to changing economic conditions, and on balance, we believe a level of economic uncertainty is the sweet spot for the group. There's certainly a changing tide in the industrial relations landscape, and whilst there's been no legislative change of note, there is much more unrest and much greater union activity. We applaud the government's commitment to addressing the inadequacies of the Holidays Act, and we will endeavour to influence this review and remediation to ensure it goes far enough and caters to the specific needs of contingent as well as full-time permanent employees. hope this is not too much detail for you, but interestingly, in the last couple of weeks, the New Zealand Court of Appeal upheld a ruling delivered by the Employment Court last year that labour hire workers working in LSG Sky Chef's catering operation were deemed employees of the company. And if they were union members, they were entitled to the employment conditions set out in the union collective agreement. In this case, the labour hire company was treating their employees as contractors rather than employees, therefore not affording them the rights and entitlements as employees, such as deducting PAYE, paying KiwiSaver, ACC and the like. Ironically, given this ruling, we believe the legislative framework is correct and does protect workers. But I think it does highlight to our clients the advantage of dealing with a reputable and compliant company such as ours. Despite this, there is a bill before Select Committee called the Employment Relations Triangular Employment Amendment Bill. It's generated a lot of business interest and a surprising number of submissions opposing it. The bill is designed to allow employees of a labour hire business to take up the same rights as the employees of the host employer, including collective employment agreements and filing grievances. If the bill is passed, it will suppress the ability of workers and employers to seek innovative employment arrangements. Ironically, it seems to counter the findings of the New Zealand Labour Party-sponsored research establishing the Future of Work Commission. The findings acknowledge the growing importance of a diverse and well-structured contingent workforce in the economy. We will watch progress with interest and present our submission later in the year. So in terms of financials, some of the lines look good. Certainly we've had excellent growth trajectory as a result of the key acquisitions that you're aware of. However, as you're aware, with our financial performance, we did not deliver the earnings you and we sought. This was largely, as Ross had said, as a result of underperformance in AWF, which we've referred to in our trading updates. Our AWF revenue fell from 157 million to 130 million, and our margin dropped from 8.7 million to 4.8 million in the period. This was a function of softer demand in civil construction owing to unusual seasonal weather, difficulties in the construction sector, and our decision not to participate in lower margin, high volume M&L work. The lucrative migrant channel was frustrated by delays in processing and arrivals, and when they did arrive, the timing didn't fit with client workflow. This impacted us in a cost and revenue perspective. Again, as Ross said, Absolute IT contributed particularly well, as did Madison, but not enough to compensate for the drop in AWF. The cash was good though. Notwithstanding lower earnings, we continued to streamline financial operations, and full credit to Tony here, and we delivered this strong cash flow. Cash from operations increased from 7.6 to 11.5 million. We saw a big improvement in working capital, up 5.1 million year on year on the back of strong receipts from customers, and we tidied up some of the big balances at the end of 31 March 17. We've touched on this DRP, and certainly the board undertook this review of our structure and dividend policy, and the decision was taken for the dividend reinvestment plan. We could have continued to pay down debt slowly from the acquisition of Absolute IT, but this allows us to repay the acquisition debt much more quickly, enables us, importantly for the business, headroom for growth via acquisition or other future initiatives. I was happy with the uptake of the scheme, although we were looking for 70, as Ross had said. And again, we've now this month retired $3 million of core debt. We expect our leverage ratio to reduce to the range of 1.5 to 2, which is our objective. Welcome to our bank here, Richard and Mike from ASB. We've got a great relationship with ASB, and they're super supportive, and we will renew our facilities with them early. They don't expire till October next year, but we anticipate renewing those facilities in the coming months. So where's the focus? What are we up to? Although we didn't achieve our financial goals in AWF, we continue to make good gains in how we do business, driving our platform change from both a technology and operational standpoint. We've built better capability in personnel, and our GMs now have a full complement of leaders coupled with client and candidate consultants. We'll continue to work on AWF's process improvement, streamlining our time and attendance processes to bring them fully online. This will make it more accurate for clients and candidates and efficient to deliver. We've invested in marketing, compliance, training, health and safety, and AWF is becoming a much more sophisticated business in what is becoming a very, very complicated market. We believe this is the pathway to increased returns and growth once more. AWF's client solutions are being further developed to ensure we deliver business outcomes and broader resource needs, rather than just one at a time, just-in-time delivery of people, which is the less profitable way of doing business. We often talk about opportunities to create leverage between the operational businesses in the group, and one such example is that AWF have been able to utilise the managed service capability that Madison developed, and we expect AWF to deliver the first managed service this coming year. I'll talk more about this demand for this service later on. Absolute had a great year, as we know, Tracy. We've successfully transitioned the business to management from the founders and completed the earn-out as expected, as Ross had said, and as budgeted. Absolute enjoys extremely high client and candidate feedback and is the market leader in the recruitment of IT talent. We plan to continue to develop our leadership capability to drive growth in consultant numbers to capitalise on this continued strong demand from our clients. The integration of back office functions into the group will be progressed, but our strong independent brand and delivery model will continue. In the past year, we've co-located Absolute IT and Madison in both Christchurch and in Hamilton, where our branches are smaller. This gives us leverage from a client perspective and strengthens our regional footprint. Madison and Absolute IT work well together and are very complementary. There are more synergies like this for us to consider as our group evolves. Madison had an encouraging year. I'm really, really pleased to report that the goal that I told you about last year of implementing a large managed service program of contingent has been achieved. This was a significant feat and was achieved on the back of a very impressive delivery of a partnership with Stats New Zealand for the 2018 census. Census recruitment has never been outsourced before, and in order to deliver New Zealand's most geographically spread out and largest volume recruitment project ever, our team designed and delivered a completely tailored solution, drawing on group resources to assess, deploy, manage and pay up to 3,000 workers over a 3-month period. We gained a great deal of knowledge and invested in systems and capability, which the business has retained to be deployed for the future. The managed service contract that Madison won was with a large government agency and is a 4-year contract with options to renew for a further 4 years. It is a very different model to what a traditional temp agency would deliver, and also represents annuity revenue, which is obviously very good for our business. In effect, the whole contingent workforce can be outsourced to Madison, every temp, contractor and statement of work. Whilst there have been managed services for permanent recruitment in New Zealand before, there is now growing interest in contingent workforce managed services. So rather than supplying one temp for one vacancy, instead the managed service provider, or MSP, is responsible for the day-to-day management and training of temporary employees, of all temporary employees. Organisations implement an MSP solution when they require high quality of workforce, effective cost control, visibility of their workforce, and have the desire to work in greater partnership to forecast demand for just-in-time delivery. Madison was appointed based on an innovative MSP solution which draws on our candidate reach and attraction strategies, our worker retention initiatives and our technology platforms. Partnering with the group really provides clients with the confidence that they are accessing a large and agile workforce. And there will be resources and expertise in health and safety, marketing, IT and payroll that other providers cannot offer. This is why we're excited about the group's future. Clients' needs are changing, the skill sets that they need are changing, and we have the capability to offer innovative solutions to meet their needs. Together, my team and I are focused on strengthening the business, finding synergies and creating leverage to ensure long-term and sustainable growth. Thank you.
Thank you, Simon, and of course we'll take questions or comments on that in general business, should you wish. Can we now move to agenda item number 5, and that is the appointment and reappointment of some directors. And if you look up behind you, you can see that 94.85% by proxy support these resolutions anyway, all 4. 94.5 in favour, 5% were floating votes, and 0.15 were against. So who registered the protest vote, we don't know, but clearly it's in a majority. But nevertheless, whilst I plan to move both the appointment of Nick Simcock and the reappointment of Julia, I think it's a great opportunity for shareholders to have the opportunity to hear them speak during the AGM. So with that in mind, could I ask Nick Simcock, sitting on the end, to have a few words?
Well, thank you very much, Ross, and I'm delighted to be up for re-election. I've spent the last 6 months in the business really trying to understand the business, working with my fellow directors, and I've spent some time in the business with our staff, with the leadership team, and my perspective is that we really actually have a very strong platform for growth. I've been really impressed with the quality of the people in the business, the culture, and really the focus on change and embracing that change. My background is from a corporate perspective. My most recent corporate experience has been with a large US talent management and recruitment firm in various leadership roles across Asia Pacific. What I've spent a lot of my corporate career doing is working on new business models, integrating technology, looking at the way that recruitment and talent management is delivered. And so I'm really excited to be in a governance role on this board. I mean, my perspective is that the recruitment landscape is going to be changing significantly. And while we do have a strong platform for growth, I mean, there are some things that are really going to impact us. I mean, technology, artificial intelligence, machine learning, the nature of work, new channels, new business models, everything is up for grabs. And really our challenge is to understand that, to take what we've got and to navigate that. So I'm delighted to be working with my fellow directors and supporting Simon and the management team in that journey to help position ourselves for those opportunities and navigate our way through those challenges. So thank you very much.
So I'd like to move Nick's appointment formally to the board, given we appointed him during the year. Could I have a seconder from the floor? Mr. Parks would second you. That's a good indication. All those in favour? Against? Or perhaps I should just say that. All those against? Silence. Good. Well done. Congratulations, Nick. Welcome aboard. And along the same process, my pleasure to also move the reappointment of Julia Hoare. Now, I guess I could claim being responsible for finding Julia some years ago when she was Pricewaterhouse partner, about to retire, looking at the future, and I was delighted when she agreed to come to the board. We at the time then, as Ted will tell you, were 3 blokes probably, and Simon, Ted and I, and it was interesting to have some particular skill set prepared to come along, and as I said, I was even more happy when she agreed to be reappointed this time. She's a great director. We don't demand too much of her time, I don't think, but when we do, for financial and those matters that are of great skill requirement, she is there every time. So I'm delighted, as I said, she has undertaken to be reappointed. I'd now invite her to say a few words.
Thanks, Ross, and I'm delighted to say a few words, and I will be brief. I'm really proud to be associated with AWF Madison. It's a great business. I've been on the board, as Ted said, for around 5 years now, and I've seen some huge change in maturity. We've talked a bit today in relation to the AWF side, and certainly from a financial perspective, it has been disappointing. But I really see that we're on a journey of rebuild and repositioning. We have given away our lower margin business, and we've also had a massive focus on health and safety, with AWF shedding many jobs, some smaller but many, but just where we just really simply couldn't get enough formal comfort on the health and safety side to be able to continue to service them, whereas some of our competitors perhaps are a little less serious about their health and safety obligations. We've had a massive focus on getting the best out of technology, and that's been quite a journey as well, but I think that we've popped over the hill there, and I'm really delighted to see a far greater focus on the use of technology. For Madison, it's matured and it has been really repositioned well. And Simon did talk about the census project and also our deepening reach in the managed service contract area, which I think is fantastic, and it really is the way of the future. So I think that we're leading the charge in that respect. I think everything that needs to be said about Absolute has been said. It's a great, strong, successful business, and delighted to have it part of the fold. Our board is effective and it is collegial. I'm really delighted you've appointed Nick. Worked with him over the last few months, and he gives a fantastic contribution. But I'd also like at this point to thank Ted, acknowledge him for his wisdom, massive contribution. He's been with me on my governance journey from day one, and I've learnt a phenomenal amount from him, and I really respect and admire that. So I really want to thank you, Ted, for that. I've been deeply involved in many aspects of the company's governance and chaired the audit and risk since I joined the board. I really feel that the building blocks of the last couple of years and the structural progress and Simon's focus on building the management team is laying very good foundations for a very bright future. I'd like to continue that journey with the company, and I hope I have your support to stay with the business and help continue to grow it into what is really great. So thank you for your time today. Thanks.
Thank you, Julia. And in moving your reappointment, you made me think of a task you recently undertook, which was to renovate your house. And I often think that embracing technology, as we have to do, is like renovating a house. It costs you more and takes longer. And that, I think, is part of the story of AWF. We are investing heavily in technology. We've told you that for years. It is taking longer and it's costing more. Right, you've heard Julia. I would like you to support my moving of her reappointment. Do I have a seconder from the audience? Alan Best would do that. Thank you, Alan. All those in favour? Against?
Yes.
Right. I think it's carried, though. You can deal with him later.
I said yes.
Oh, I thought you said yes. I thought you said yes to objecting it to it.
No, not at all.
We did have a very vigorous opposition at one time to Ted Van Arkel's reappointment. And as I see that shareholder is still here, I won't go into the detail, but when I spoke to the shareholder about why the hell did you object to Ted Van Arkel's reappointment, the shareholder said to me, well, he moved another company that he was chairman of to Wellington. I couldn't go to it, have lunch. But if that was all it was okay. We got over the line, Ted's reappointed, and here he is still today. So thank you. I declare Nick Simcock appointed and Julia reappointed. And I'd now like to pass the meeting over to Simon Hull.
Morning, ladies and gentlemen. I take over for, I hope, just a short period for the consideration of the resolution to reappoint Ross Keenan to his position. As Ross has indicated, this will be his last term with the company. He's agreed to continue and assist with the transitional process. He earlier mentioned generational shift, and the board will certainly be spending time considering the skill sets and people that can add the most going forward, and where that best dynamic for the chair position may be in due course. I believe Ross has and does work very well with management as and when projects require. He has a good understanding of the dynamics of the business units, both the newer ones and the established members of the group, and he will best manage this next period for us. I don't know whether you want to say any more, Ross, but without further ado, I would like to nominate Ross Keenan to be reappointed to this position of chairman. Could I have a seconder from the floor? Mr. Flower, thank you. And I note this motion carried. While I'm in the chair, and before I hand back to Ross, I'd just like to take this opportunity to thank Ted Van Arkel for his contribution and all his input into the organisation. Ted and Ross joined the AWF board as it was then, 8, 10, maybe 12 months prior to the IPO, as independent director and chairman respectively. And I must say they brought a much needed experience and discipline to a young and growing company. The board you see now, like the company, is bigger and much more diverse than it was 13, 14 years ago. Much water has flowed under the many bridges which span this broad and varied organisation, and its many thousands of employees who are spread out in NZ Inc. Ted, thank you most sincerely on behalf of all the shareholders for the commitment, the values, the rigour and experience that you have brought to the board over this time. I'm sure we will miss your probing questions and your tireless attention to debtors. I'd like to give you a small memento, a little something to remember our origins. Without a doubt, you're going to be the best dressed as you put the wheelie bin out in Parnell. And I invite you to.
It looks great. Thank you very much, Simon. It's even got my name, I see, on the back.
No, it's got your name on it, Ted. It's got your name on it.
As you get older, Ted, you can't get lost.
And if you find yourself under Wendy's feet, I'm sure you'll be able to head into any old AWF branch and we'll keep you gainfully employed.
Thank you, Simon. Do you want me to take that now?
Yes.
Yeah, please.
Well, what a surprise. No one told me this was going to happen.
Deliberately so.
I knew that I would be able to say a few words, and I thank you very much, Simon, for your kind comments. Ross, of course, Julia, and all the other directors as well. It's been a great pleasure to be with you and be part of your team. As Simon indicated, or said just a moment ago, Simon Hull said it just a moment ago, I got a call from Russell McVeigh back in 2004, about the time that I was about to step down as director, as the managing director for Progressive Enterprises. And they said, well, this company, AWF, is looking for a new director. Would you like to come in and have a discussion with this founder, Simon, and with Ross, who had already been appointed as a director? Which I did. So that discussion was an interesting one, and I think I've relayed the story. The common thing I had with Simon at that stage was the fact that he had a place in Owakuni, and when we arrived in New Zealand as a Dutch immigrant, we also lived in Owakuni in '53. Well, Simon is a keen skier, was a keen skier, I think you still are, and we talked about Owakuni perhaps more than what we actually talked about AWF, but it was an interesting discussion. I was obviously joined the board, I had done my due diligence, I was intrigued with the company, what it stood for, how it operated. And in those very early days in AWF, we would, from time to time, meet at Penrose on a regular basis in the original building that Simon bought. The office that he had in limited space format, but we did have early breakfasts with our gang from time to time as well. At 6 o'clock in the morning when Ross and I would join Simon, he'd wind the team up and get them going for the day and for the week, and also talk about days gone by. and what had occurred during the week. But it was it's really how Simon was operating that business that struck me as being very much core to the value of the company. Well, time has moved on, and I must say that in those early days, we also had Greg Webster there as our COO, I think was his title. Greg has passed away, and unfortunately it happened after my watch when I ran a board meeting when Ross was overseas. We had a good board meeting, and Simon, you were there for that day. No, were you overseas? No, you were there. And lo and behold, the next morning, Simon, you received the call that Greg had passed away during the night. It was very sad, but he was a great guy and was very much involved in starting the road for our health and safety journey, which he was the champion for, and he did a great job in those early days under difficult conditions. So what am I trying to say? It's been a great journey. We've had highs and lows in the organisation during the 14 years that I've been involved with it. The highs are obviously the acquisition of Madison and IT and the Absolute IT. The lows have been our move into the seasonal pickers concept, which didn't turn out to be the best. Our health sector was left a little bit to be desired, but we've come out of that. We're now well positioned for going forward. Times are changing, as has already been commented on, particularly by Nick and others, that this is a moving feast, and we need to be sharp. We need to be up with the play with the big boys around town. I've thoroughly enjoyed my journey, but as I said 2 years ago at this meeting here, it's time to sort of start smelling the roses. My time's come up, and there'll be a couple of other companies that I'll be saying the same thing to in the very near future. So I wish you all the very best. Thank you for your support. Really appreciated that, and I wish the company all the very best as you go forward.
Yeah, I'll hand back to you.
Well, thank you, Ted. Indeed, journey it has been, and journey it continues. Ted talks about those days in the top of Simon's building, not one of the more salubrious boardrooms that Ted and I had ever been associated with. In fact, it was more like a big cupboard, but that was okay. We weren't there for very long either, were we, Ted? But it just is an indication of where this all started, with this incredible energy from Simon Hull, this incredible people involvement that he had. It really was astonishing to watch. I'm surprised he's got the energy to sail small bloody catamarans in Europe with the younger generation. He's doing the younger generation thing a different way. He's going sailing with the younger generation. Are you on the boat actually, or are you just... Oh, absolutely. There you go, you see. And he used to fly his helicopter down to Owakuni, which some of us on his board used to think carefully about too. But there you go. He's still with us, and he's moved from helicopters to the sea, and some of us, you'll appreciate, are pleased about that, given the event of the last 48 hours down south. Okay. And so now then we move to agenda item number 6 for those who've got your agenda, and that is to record the auditor's reappointment and remuneration. And astonishingly enough, Andrew, this got 94.5% approval as well, exactly the same as Julia's. So obviously people voting with the numbers are pretty happy with what you do. Of course, I've been there all the time. I like the relationship with Deloitte. Every company says it, that they're a complicated business, but we are a complicated business. We have lots of people out there, lots of issues around health and safety and accounting and debtors and all that go with it. And so when you come to audit it or count the numbers, it is a little more complicated than a product being sold. We've had associated with Deloitte all through the listing period. Andrew has come and gone as you rotate your partners as you do. And so may I move that the board be authorised to set the auditor's remuneration for the financial year. Some of you will have noticed in the annual report the auditor's fees actually came down for the year. Now, you don't hear that too often, do you? So if that was a mistake, Andrew, too bad, too late. But we'll take it. Thank you very much. And I'm hoping I'll get a seconder from the floor that you be reappointed. Thank you, Mr. Oakes. Done so? Carried? Yes? Thank you. Right. Now I'm moving to agenda item number 7, and that is that we anticipate issuing restricted shares. Now, this is not for resolution, it's for information, and this is the fact, as you know, some years ago the board agreed to issue as an incentive to staff restricted shares. Now, they're restricted because staff don't pay for them until the strike price and time goes forward. There tends to be a 2 or 3 year period of time. We issue a strike price. They are entitled to the dividends from them during that period. And actually, we haven't done too well in setting a strike price that's been very attractive for employees to want to convert them. Nevertheless, we're continuing with that scheme with new, younger management. We believe it does provide the incentive, and we have in mind probably another 300,000 to 400,000 restricted shares, most which come from within the current pool of these shares that we have. Strike price, David, I think it's about $1.93, is it? And at the shocking share price at the moment, people should be in the money with that if we can deliver some growth. So that is for your information, and if you want to ask me any questions on that, I'm happy to take that in general business. So move to agenda item number 8, and that is indeed general business, the catch-all. And we would appreciate if you could just let us know who you are when you do ask a question, so that we can properly record your comments and follow up as required. But firstly, may I acknowledge the retirement of Ted Van Arkel as well. As Ted said, he and I were invited by Simon Hull a long time ago to work with him and prepare what was then Allied Workforce, a very complicated multiple company structure to take it to the market. Craig's told us it would take 6 months. In fact, my involvement was 18 months before we got to the market. But we did, and we met the prospectus objectives in the first year. Do you remember that, Mr. Hull? He often tells me that when we don't meet our current objectives. But we did that. And through that time, the board was fondly or locally known as the Old Boys Club, which was Ted, Simon and I. The old part probably being Ted and I, the boys being Simon, who was a bit of a boy about the town at the time, we later found out, didn't we, Simon? Not you? No. Well, you found your yachting, and that was all right. But in this sort of process, you tend to find your own level of contribution. And I've always admired you, Ted, your structured approach, the discipline instilled in management to maintain standards. And although we were a small listed company, the rules were the same as if we were large. A new relationship with shareholders had begun. So thank you, Ted, and wish you well. Thank you. And I was hoping when Ted said he'd like to speak, I thought that was great. I thought I'd like him to speak and dominate general business for at least a half an hour and wear you all out. But he said no, he doesn't want to do that. He would rather just have a few words of gratitude. So can I open the floor to general business? And bear in mind, I'll be pretty quick to duck a hard question if I can to one of these blokes along here. Any questions from general business?
My name's Robert Gray, shareholder. For 2 years in a row, I have not had a notice of meeting. I had to go to the library in the weekend to find out where and when this meeting was. I complained last year.
You did?
What I would suggest that with Computershare, if Link are not doing their job properly, you deduct money from their fees. You can deduct $1,000 for last year, $2,000 for this year. If I don't get one next year, deduct $4,000.
Well, there's a thought.
Also, in regard to that remark about me voting against Ted Van Arkel one year, I also complained to the Queen about him having these restaurant brands meetings down the line, and that's why he didn't get his knighthood. She was going to give him one, and she said, well, this is not on, and she cancelled it.
Well, you've introduced a new element of power in your shareholding. Is Robert Gray the only name you go by as a matter of interest? My goodness me. But your serious question, you did raise that.
The annual report, that arrived yesterday.
Arrived yesterday?
The annual report did. No notice of meeting.
Do you live on an island somewhere, perhaps?
Down in the metropolis, just down the road.
Oh, shit, everyone should know where that is.
A whole lot of notices, but not that one.
I'm running out of excuses for these boys. We will certainly, David, take it on board and get that to you. Thank you. Is that the end of general business? I fear not. Right, who's first?
Yes, good morning, Jared Pinn, shareholder. Earlier you said the share price is shocking and there are a few trades in the company, and I'm wondering if the company needs to be more declarative on what they're trying to achieve. Is it?
Sure.
Is it the board's intention to move the company predominantly away from labour hire and reposition itself in white-collar recruitment? And should shareholders consider the continued dividend payout demonstrates the board's confidence in doing this?
I'll answer the second one first because that's the board's decision, and the board's decision is to provide the maximum dividend we can within our criteria of the time, and that's what happened this year. There were some of us who thought, given a lower profit than last year, we should actually reduce the profit, but in fact our professional advisors said, look, with the cash you're generating, you should continue the profit because that's what your directors that's what your shareholders expect. In terms of the future of the company, we've deliberately gone into the white-collar business to provide the mix, and there are some synergies. But I suspect your question is more, and I have said in my presentation to you, that for the first year, white-collar has produced more income, net and gross, than the blue-collar. So that being an operational matter, and me getting into trouble from commenting on those before, I'm going to pass them to my colleague, Simon Bennett.
Thanks, Ross. Look, I think that the blue-collar business is going through significant change, and I think that it's taking years, not months, for the market to start pricing that work correctly. I'll give you a really simple example. We provide a lot of workers on roading, and a year ago NZTA mandated that anybody that working on any of their roads must have passed a Construct Safe certificate, and that is not a big deal. We ran the training, ran the certification through for probably 1,000 people. Fleur, would that be right? Because it's like nearly $100 a person, and when you're putting somebody out and making a few dollars an hour margin, it takes a while to recoup $100. So that's kind of the environment that we're in at the moment. There's a lot more compliance from a health and safety perspective. I've talked a lot about the changing application of the legislative framework. The Holidays Act, just about every large company in New Zealand has been hit by the Labour Inspectorate for non-compliance. So this, mad legislation to comply and to make payments is much harder. And I think that oftentimes you're paying somebody a statutory day or a sick day when once upon a time you didn't have to. So it's just a changing time. Construction market is tough and complicated. You will have seen in the news in the last 24 hours a big construction project in Alexandra Park on hold, contractor moving off. It's just a tough space at the moment. We think we are building to do good business, and there's lots of our clients who want to pay the right price and want to have partnership, and we think that will grow again. But in the meantime, the opportunities in the white-collar sector are significant. I mean, we have talked a lot about Absolute IT, but we are getting decent margins, decent partnerships with big clients for these pieces of work. And I talked a lot about managed service. I mean, these are good opportunities for us. So there are more opportunities in white collar for us at the moment, but we certainly intend to grow AWF again. Does that answer the question adequately?
In a roundabout way, it does. It seems to me that you're a bit timid to say that you're going to reposition yourself into the white collar division. And I could understand that possibly you are a little bit hesitant to say that until it pans out successfully. But the dividend reinvestment plan enables you to pay down the acquisition of Absolute IT. Yeah. And if you were to make another further acquisition, where would that be? Would it be in the white collar division or the blue collar division?
I'm not meaning to be tentative, but Simon Hull's sitting behind me here, and I don't want to tell him that the business that he founded is not going to be majority AWF moving forward. Look, I think it's more likely that it will be an aligned space that you might not describe as blue or white collar. It might be more around services that would provide to the market.
All right, thank you.
But I do think we need to consolidate where we are. We've both mentioned the value in diversifying into white and blue. We've both talked about getting greater synergies out of the combination. I think the financials demonstrate that. I was looking the other day at AWF, and I reckon we're 2/3 of the way through the absolutely rebirth, and I'll call it that because Simon talks about legislation, health and safety, compliance, and it is more expensive, and it does mean that we knowingly got out of low yield business, and we had a lot of that. I won't mention the clients because they'll probably be either very happy or very annoyed that I mention them, but we did walk away from probably $10 million worth of business because we foresaw that we couldn't make money from it. That's not to say we haven't begun to pick up new, stronger yielding business since, fully in compliance with the law. Now, I would go so far to say, probably got to be careful, that we'd be one of the few, if not the only one, who is fully compliant in the Holidays Act and in the health and safety legislation, and we monitor it very carefully, but we sure as hell are going to grow the blue-collar business. If you remember, those of you who have been around a long time, New Zealand has a much lower percentage of labour contracting in blue-collar than Australia, less than half here. People have said to us sometimes you should come to Australia, but there is lots of upside. We just have to get it right. New Zealand has to get the skills, or we have to have freedom to bring them in and send them back to do those skills. At the moment, we're caught up in some transitions. There's been a major receivership recently. You've seen that. There's been a walk-off of a contractor from a major development in Auckland. Those are things that hit us pretty hard early, and so that's part of our positioning to be better at it. That comes with automation, it comes with better customer relationships, and we're well down that track.
I'm Bruce Parks, I'm a shareholder and also the proxy holder for the Shareholders Association.
Welcome back.
It's good all the board are on the Audit and Risk Committee. Can the chair of the committee please tell us what the biggest risk you're facing at the moment?
The chair of that committee? I'd be delighted if she'd tell you that risk. Yeah, Bruce, can I just say, we're all on all the committees. Now, you'd say a chairman shouldn't be on the Audit and Risk Committee either, and I could take that off if you'd rather have that. But Julia very firmly chairs it, and we think that complies.
Look, thank you. I think that there are, just to talk about the audit and risk, we are all part of the audit and risk and meet regularly. There are various aspects to audit and risk. Obviously, there is the financial side, and we manage that very carefully, as we've talked about, in terms of particularly the AWF side, issues around margins, really trying to look at our customer base. So we've really tried to work at how do we position the business with the right financial metrics moving forward to grow it. So from a financial perspective, a huge focus on that. We made a joke earlier in relation to debtors. Obviously, in a business like ours, we can be a little bit further down the food chain in relation to being paid. We've got to really manage debtor profile incredibly carefully to make sure that we don't get caught as being the last ones paid. But there are a lot more risks than just financial risks as well. One of our really big areas that we've been focusing enormously on is health and safety and compliance with health and safety. And as has been discussed, that comes at a large cost, but making sure that everyone gets home safe at night is more important than cost. But that has come at some financial cost to us to make sure that we can really look after all of our people. So there's been great focus there. But we do look right across the board at wider risks. Look at diversification. We've looked at our capital structure, which is why we've got the dividend reinvestment plan that we've proposed in this period. So we do look at risks more broadly, and I think discuss and try to manage them as best as we can. Thank you.
Mr. Chairman?
Yes, sir.
Alan Best, shareholder. As usual, I come to this meeting to find out things, and I usually have more questions that I could ask than I've got time to ask. So I'd just like to take a couple of things that occurred to me during the addresses. The first is that in the old style of placement business, you'd invoice a temp into a company and you get payment. What does the court case mean as far as the mechanics of invoicing and paying the temporary employee? That's the first question.
The court case you're referring to is the one Simon referred to?
Yes.
Yep.
The second thing is, I wondered, and this is another mechanical question, I wonder if the board would consider in the annual report putting up a 5-year trend statement which includes the debt level and includes earnings per share. It's really good for shareholders to think strategically, just as I'm sure you do. And we can do that a little more easily if we look along a line and say, oh yes, the turnover's grown so much and the costs have grown so much and so on. And a lot of companies are doing that today, and it makes it quite easy for shareholders, if you wouldn't mind doing that. The third question really is a more strategic...
Consider the second one done. We'll do it.
Thanks, Mr. Chair. The third question that I'd like to pose is, I came to AWF when it was having its meetings down in Parnell there, and was crowded out. I came really from a review of what was happening in Australia, where you'll remember Julia Ross and Candle and Skilled Engineering and Chandler McLeod were all in the process, if you like, of rationalising the whole recruitment scene. And I wondered if you could see rationalisations along that scale occurring here when you are, in fact, the market leader. And does this give you bigger opportunity? So those are 3 ideas that occurred to me during the address.
So I've ticked off one very quickly, and I'm nipping 2 over to Simon, the court case, Simon, and rationalisation in the industry.
So the court case, what was around, if we engage with a client, as you described, we will pay the temp for the hours work. They work for 20 hours and we pay them $20 an hour, and we bill the client accordingly, that plus the margin. The court case was more around the fact that Sky Chefs had gone to the provider and they said, look, we want these workers and we'll pay you $500 to get this work done. And so they paid the temp agency or the contracting agency just paid $500 cash, or almost cash on invoice to the candidate. But given that there was no deductions made, so they might have worked 50 hours or 60 hours, so they're in breach of minimum wage even, because they weren't genuine contractors. So we have contractors in our business, Absolute IT, Madison have contractors, but they're genuine contractors. They're often GST registered, they're being paid 60 or 70 bucks an hour. In fact, in the last year or so, legislation was changed so we have to deduct some withholding tax for payments to contractors. But when people are on minimum wage, they're not a contractor, and you can't expect them. The IR don't believe that you can leave these people to be responsible to pay their taxes and the like. And when they have one source of earnings, they're actually not. They're not a contractor. They're an employee. So we bid. Fleur bid for that business, and we didn't get there. And we knew the margins that we had offered the client. And we were out of the park because these guys weren't paying the lawful requirements. So, in many ways, we're happy with that case, but we just it gives us opportunities, and they've gone to market again, this company. So we'll see what happens. But it's an opportunity for us, but it's kind of just disappointing that the government or the private members bill seems to think that there needs to be another legislative mechanism as a result of that. That's the point that I was making. Does that answer the first question? So the third question on rationalisation, I would say at this stage of the cycle, there are a lot of niche, small, white-collar, permanent recruitment businesses, and we are facing a lot of competition for our workers because the market is at the top end, and white-collar is reasonably lucrative. When we move to a different part of the cycle, whenever that happens, whether we go into recession or there's a bit of a downturn, we think that that some of those smaller players will be rationalised probably. I don't think the same thing's going to happen here as what happened in Australia, because there's a bigger play really, and Nick alluded to it. I talked a bit about it this time last year, that I think that people are interested in the platform that might disrupt, or the platform that might disintermediate recruitment. And so the big global players, Microsoft own LinkedIn, and LinkedIn are trying to kind of own the world of people and have their mitts into people and enable them to monetize it. There's Seek in Australia, although Australian domiciled, are a big global player in the space. We use them for job boards, but they're also trying to establish platforms. One is called Sidekicker in Australia, which is a digital platform where it's a marketplace, a bit like TradeMe for people. So I think that's where the more interesting stuff is going on, and I think that that's where the consolidation or some of the acquisitions will occur, and it's a space that we're really super interested in as well. But if I was to go a step further and say, are we worried about that? We consider it to be more of an opportunity for us, because we think those with the deep relationships with the candidates and the transactional history, or the work with the candidates, are those that will prevail. So if I can give you an analogy of TradeMe. So eBay are obviously global and big and would have liked to have owned this market. TradeMe managed to hold their position, and with respect to John McDonald and his team, probably not with the best technology. TradeMe is quite clunky, but when eBay came to market here, TradeMe had all of this transactional history. They knew Simon Bennett, or probably not Simon Bennett's son, George Bennett, traded, and he was okay. He paid his money, and he delivered it on time, or when he sold something, it was as he said it was going to be. So that was where the value was. It was in that transaction, and in the referral and the knowledge around that transaction. And so eBay were unable to come in. So we sort of feel a bit the same with people. It's fine to have the platform, but Simon Bennett knows that he placed that director at UE Insurance and who he is, and he's got that relationship. So actually that transactional piece needs to be efficient and slick and low cost, but the relational or relationship that we own is kind of where we think the long-term value is.
Thanks.
Blue collar rationalisation. Well, I mean, the blue collar piece, we think there's much to play out there, because we think that the regulators really aren't on top of the market, and I think that probably there'll be some sort of licensing process for blue collar labour hire in time, which I think will cause some rationalisation. I thought it would have happened with just the changes in the health and safety regulations, but it didn't.
Thank you, Simon. So back I am, and are we alive for more questions from the floor? No, there are not. So with great pleasure may I congratulate our reappointed directors. May I thank Simon Hull and Simon Bennett, wish Ted Van Arkel the best, and close the meeting. Thank you for your attendance.